Okay, today is the 9th of February 2022, Wednesday. All right, so it's another day. Now, yesterday we have a very incredible day whereby the market keep on surging, and of course, I did mention to you guys yesterday during the MAO. I said that right, we may have a bit of upside time being until tomorrow, which is the CPI data. All right. So of course, more important things that I was sharing with you guys, I'm quite actually bearish with this this NASDAQ. But of course, we saw what happened in the, I think about midday of the US trading session. The NASDAQ suddenly just recovered and went all the way up itself. Okay, so these are things whereby I cannot control, whereby we will write initially, then after that itself, right, they have something coming in, they have some other ideas, and if you follow the chart, you will know that it was a buy upon that itself, right? So to me is that I'm not here to predict things. Of course, if we get it correct, I don't mind. But if I get it wrong itself, right, please understand that we can be correct to the point that we are based on chart. But if there's going to be a sudden U-turn in the market, I mean, something that out of nowhere, then of course, is you just have to understand that that is beyond my control, yeah? So hopefully that clear up some of the questions that are being asked this morning from some of you guys, so you will privately message me. Okay, anyway, today itself, right, I'll talk about is more to commodity prices, and then I think this is going to be very important because that will lead to the reason why I still think that the market itself in general is going to have some profit taking in the next few months' time. So let's begin. Now, today's collage itself, right, you can see that Mark Zuckerberg took a very big picture of my one quarter of the page. And of course, reason why, because Facebook continued to fall. So my forecast on my little view on this Mark Zuckerberg and Facebook was actually correct, because I mentioned to you that right, Facebook shouldn't buy now. A lot of people have been asking me, can buy Facebook when it dropped by 20%. I say no. When it dropped by 25%, I keep on saying no. Even when it dropped down to 30%, I still repeatedly say no. Now, there's a rational reason why Facebook itself is not a buy yet, because I mentioned to you the asset that they have now have been a problem. Example, Facebook has WhatsApp, right, which is not a profitable application, although they utilize it to get data. Okay, they basically use for data farming. All right, and then how about this Instagram? At the moment now, it's losing a lot of traction to TikTok. All right, and of course, Metaverse. This is still a very new project, so they are spending a lot of money to basically inculcate this of the business. So basically, right, and because of TikTok ongoing right now, what happened is that there are lesser subscribers coming into Facebook. Okay. So with all these reasons, it's going to be going to dampen the mood at the moment right now, okay? So that's the reason why I said that Facebook do not jump in yet, wait for a while, all right? But of course, again, if you are a value investor, you think that Facebook share now is very cheap, you feel like buying, I won't stop you, okay? Anyway, this is my personal opinion. Now, of course, Tom Lee feel that, right, some of the tech shares now is very good and low enough. The reason why I started off late today is because I realized that my CNBC Pro subscription got to be a problem. I mean, I paid for it, but I just couldn't access. That's why later on, a certain slide, right, you notice that I can only show you the header, but I can't show you the body, the content, yeah? So that's the reason why that was a bit delayed this morning. And of course, China, all right, even though usually Chinese people will, after during Chinese New Year, a 7-day break, they go to watch movie. But apparently this year now, the movies are not really the box office is not getting the type of sales that they want. Why is that so? Because the price actually increases. So even during the festive season, right, they increases the ticket prices. So of course, people say that, okay, fine, since it's increased by 8% to 10%, I just don't watch, okay? So, you know, this is what's going on right now. Everybody realized that, right, things are increasing in prices, but not our pay. So because of that itself, that means that lesser chance the economy is going to move, and that's a problem, yeah? So disclaimer apply as usual. My job is to make sure that you guys hear what I want to share with you, and of course, end of the day, you make your final decision, yeah? All right, Wall Street joke of the day. Now you can see that now what? The bull asked the bear, and the bear didn't reply, but obviously they are wearing a mask. So what is happening right now is that actually the question is the pandemic going to continue? Number two, would a pandemic actually create more problem, or are we going to be seeing the end? Now, the thing is this, there's some ongoing advice, rumors saying that now with Omicron going around, and based on the history of flu, is always a very big, very infectious disease, but usually it's a mild one that will end the earlier original flu. All right, that's what happened back then. So that's the reason why you can see that probably our government is also relaxing certain area here, because they probably knows what's going on, and maybe they just want to have a herd immunity so that we can move on in life. That's why now we can see Malaysia, they are going to reopen their borders. So, and that's as early as March, even though the numbers are creeping up, as you can see over here. So all these tell us that maybe we're going to see something very interesting. So let me just share this with you. Now, I couldn't find an article where Tom Lee actually says that his technical guy says that whenever the market peak in terms of COVID cases, after about 2-3 months, the stock market will see a bottoming out effect. I've been trying to scan through the entire Google. I couldn't find a particular article. So if you guys can find me the article, please PM me on the site. Yeah, I know that I put it in one of the MAOs, but there's so many MAOs I have, I can't remember which is which already. Okay, all right. So what I did was I make a simple one. Okay, I tried to remember what he said. So what I did was I actually take out the global worldwide COVID chart to basically do the peak on its own. So what I did is I find the peak of every time, and then I compare this with the stock market. Okay, the first one I used was 11th of January 2021. That was a peak before it came off. Okay, so what happened is, if I look at the chart right now, I actually did the peaking lines, okay, to indicate whenever it peaked, what happened to the stock market. And I cannot find that type of thing that he said, but only something nearer to it is that, yes, indeed, when the market peaked in terms of the COVID cases, one thing for sure is that the market do continue to fall by minimum 1 month to 2 months. Then it looks like it will bottom out before a rally. So it seems to be make sense. All right, so it happened again back in April 26th, okay? And the market really fell. And after that itself, the market started to rally, right? Got the idea? So on the 23rd of August, the market peaked somewhere a bit, it didn't really peak exactly. It dragged about 2 weeks later, then the market came down, right? And so it seems to be after that, the market goes up again. So what we are seeing right now is interesting. The peak recently is on 24th of January, but the market is not actually on the high side, it's actually on the low side. So I assume that this is actually the crux of it, the highest point. So which means that now moving forward, there's a 1 month to 2 months of further downside based on what we are seeing now. After the peak of COVID, usually about 1 or 2 months time, the market will come down a little bit. And then after that, then we can see a potential bottoming out effect and the market will rally. Got my point now? So basically, right, we're using the COVID chart to corresponds with the S&P 500. And we probably got the idea. So if 24th January is the first turning point, but of course, if we look at it, right, it seems that the peak itself was created when, let me take a look. The peak is actually created on the 2nd February. Okay, let's just put 2 dates here. 2nd February, yeah. So let's say 1 month. Okay, so 2 months. So 24th January plus 2 months is 24th. Okay, of March. Okay. Now, if it's going to be 2nd of February, then plus 2 months, it'll be 2nd of April. Yeah. So which means that, right, the market bottom out maybe between 24th March to 2nd April. That means by right itself, right, we could see some profit taking until 24th March to 2nd of April. Okay, based on what we see based on the COVID chart with the S&P 500. So if you guys understand what I just said, please key number 1 right now. If you understand what I've just said, please key number 1 right now. Okay, so again, this is a very interesting way to do pattern recognition, because normally people will not do that. But for me, it's I'm a chartist. I like to do comparison, and I like to see whether can we get a little bit of competitive edge in state. And I do see this interesting pattern. So in fact, I can keep it to myself and keep to myself. But I decided to share. So by sharing itself, I feel happy. That's the reason why we are doing this MAO even for every single day. Now think about this. I think this is like probably my 200 or even 300 MAO. I don't know. I lost track already. So end of the day is this, I'm just doing all this because I want to make you guys richer. Okay, so this is a very important thing that you must understand what's my agenda of doing MAO. If I want to make the public know me better, I will do MAO every morning with the public member. I wouldn't have done this in this private setting, right? So because I want you to understand this. But undeniable, we need to do some marketing. So that's why we actually do it on Monday and Friday right now. Yep. Okay, so yesterday when we did the chart, right, we talked about a few things, but the main thing was gold. I was very confident with gold. I mentioned that gold will go higher. Now, gold was at 1822 back then. I said that gold will go to 1827 because that is the BNB RL level. Now, RL 1x1, right? You know that I'm actually a big advocate of BNB. I love BNB a lot, and I think that is very accurate. So, and I think that, right, when it hit 1827, if the market is going to push higher, it may go to 1830, but that was yesterday's pivot already. Okay, but at least 1827 was my target, and indeed, it did happen. Yeah, it happened yesterday. The gold price actually went all the way up to the high of 1827. You see that? And then there was some profit taking. Yeah. So that means that my forecast of 1827 based on the BNB was correct yesterday. All right, it was correct yesterday. Yeah. So gold was actually considered a bit of spot on. Yeah. If you can, just do me a favor, put gold spot on for me. If you don't mind writing that, but if you're busy or you don't feel like writing that, that's fine. Now, more important thing is this particular chart right now. This was a chart that I actually updated this morning on the Facebook. Okay, so I want to explain to you something very important here because I realize that people keep on asking me the same question in the very wrong way. Their point is this: is say, Cal, why are you saying the market will crash? If you look carefully, if you actually look carefully, I did not say crash. I said that are we going to see S&P heading towards 5,004 or 3,006 first? So you notice that, right? I write 5,004 first, then 3,006. If I expect the market to crash, then I will write, let's basically write towards 3,006. Why would we bother to write 5,004? All right. So what happened is this. Look at this chart here itself. Okay. Let me just bring it in. Okay, I'm just making it a bit smaller just for the sake of showing you guys a little bit of the words first. Okay, so do note the US Central Bank, okay, the US Central Bank began tapering in November 2021, all right, scaling back a total purchase of $15 billion a month from 120 billions to 105. Then they decided to double the pace back in December to 15, instead of 15 billion, they reduced by 30 billion, all right? So if you notice this is the high yield corporate bond prices. Now you notice that, right, the high yield bond prices, it moved in tandem with the S&P 500. It means that when S&P drop, it dropped. When S&P is up, it's up. All right, so on the all clear. Now what happened is this, you remember, during October point, that was where Federal Reserve already come and surfaced and said that they may have to, do some tapering. And then obviously it started in November. Okay, so what you see is this, the high yield corporate bond price up to fall. Can you see that? The bond price starts to fall. Now that means that the yield is increasing because of the tapering. Then it will be the interest. It will be the increasing of interest rate, right? So the bond price began to fall. Now it was supposed to be the best brothers, again, Abang Adik here. So what you see is that incredibly at the same time, the S&P 500 continued to go to new high. So what was the reason for that itself? There was a lot of share buyback. It was earnings season, and more important thing itself, they are trying to, see whether can they hold the market on their own. But of course, after a while later, the market came down very fast. Okay. So if you look at it, if we are talking about they are all related, then by right itself, looking at the chart right now, a bit scary though. If let's say if they are all related, that means that when they are together, they move in tandem, right? So now the high yield corporate bond prices, if you notice this, oh my goodness, the number is about, how much is that? 3450. Now the current S&P now is 4790. Okay. So what you're saying is you're talking about the market coming down by 1,000 points for the S&P 500 just to go down to the a higher corporate bond price yield. I don't know whether it's possible, but again, this is actually what we are seeing from the chart. Yeah, 3450. Okay, got it? Yeah, okay. All right, so that's the reason why this coming Saturday so I have this, is the stock market going to sell down from February 2022? So I already ring the bell since the start of the year, and I said already, right, the market from the mid of February or early February, we may see a peak in the market, and there will be some more profit taking coming in. All right, so this is something that I have said since the 31st of December and probably 2nd of January. I'm just basically following up. All right, so what you need to do is just go to this particular web page and then just sign up. And you come to here, you just say, okay, I want to sign up, click it done, and you are all done already. Then we'll send you the Zoom link and you can come in. Now this time around, we allow Zoom link to come in anybody anytime. Because previously people complained that they were here, but they were late by 1 minute and they couldn't enter the video. So of course we understand that, and there's nothing we can do because we don't know who you are. All right, so what happened is now we have this thing here, should be fine, yeah? Okay, now at the moment now you have more than 80 people have signed up. That's a very good number to start with. But I say again, my target is 100 people. So please guys, can you do me a favor? Send this link to your friends right now and make sure that they actually get to jump some benefit on it. Definitely we get some benefit, yeah? Okay, all right, so that is what the chart, what we advertise. Now the thing is this, as we mentioned, we are going to look potentially at the to this coming of Thursday initial jobless claims and also the core CPI data. All right, so if the market come together and it's more than 7.2%, then that would face a little bit of pressure on the stock market, yeah? But if the numbers are better than expected, then of course things will get good. Probably we will see the market rally, okay? All right. So this is the Dow Jones Chart from the very beginning of the day. Suppose initially it did came down to the opening price, the short 100 points. Then you found some strength, and I mentioned to you, OP is a very powerful thing. And of course, straight away, the market went all the way up 200 points. No reason given. Everything just say, oh, earnings are good, people are buying in, and blah, blah, blah. They didn't really actually tell you what is the reason for the upside, yeah? Okay, just give me a short moment, guys. There's an incoming call once again. Hold on here. Okay, all right. So then after that itself, it pulled back a little bit of profit taking, and then it went up again. So the market basically in short closed near the high of the day. Oops, sorry. Okay, so what happened is that the NASDAQ jumps 1% as the Dow climbs 370 points, right, as Wall Street shakes off a slow start to the week. So again, there's no reason for the market to go any higher, but the market just buy. So what is happening again, because people just feel that the market is down quite a fair bit, they believe that the stock market is going to go back up again. So there are people buying into the funds, and of course, some of them buying the technology counters because they are quite badly hit. I mean, some of them lost like 30% to even 50% from their all-time high level. Okay, so let's take a look. Now, basically, investors digested another batch of corporate earnings and await for the key inflation data. So the thing is this, everybody now is just waiting to see whether what's happening right now, even though they know that the global bond yields are steadily increasing as we are talking. Okay, and the buying was quite well spread. It's like Harley Davidson went up, then American Express, JP Morgan and stuff. Incredibly, Pfizer actually came down by 2.8%. and their forward guidance is also not very good. Very interesting. I mean, I expected the drug makers to be making money, but maybe because we're going to be end of the pandemic, so these guys are no longer be in the limelight. So possible is happening. Now, what happened is that, right, we all know that the Treasury yields have went up to 1.97, and of course we have the consumer price index is also going to be higher than expected. We are all looking at that particular level. And of course, at the moment now, 300 companies of S&P 500 companies have reported, and 77% actually beats expectation, and 77% actually tops the revenue expectation too. So with all this itself, right, the question is most of them are worried is in this coming quarter because they are not, almost of them are giving a weak guidance on this. So if the market is weak itself, don't think about this. If that is going to be cases like that, then we're going to see the market really coming out pretty bad data in the first quarter of 2022, right? So that means that really by April itself, you will notice that the numbers are going to be quite bad, yeah? So that's the reason why I say that the potential selling may go sell down all the way to February to March. Then after that, it may bottom from down there, exactly what we are seeing right now, okay? Because market always sell or buy in reaction to expectation. Not when it happened already, then they go and do it. Usually they wait for some news to confirm, yeah? Okay, so let's look at the Dow Jones chart yesterday. You can see itself the impact of it. The Dow Jones opened below MA30, MA200, so we know that it's a sell. And because it's so below, but the opening price was exactly the MLP, so there was a bit of question mark down there. So what is we can see the KSI was green, but it's a downtick, so that means the buying interest is there, but not as strong. But what happened is that because it is a doji directional day, we know that if the market choose above OP, it's a buy all the way. If the market choose below OP, it will be a sell all the way, right? This is something that we talked about this many times. So you can see from the chart right now, you can see that the market basically stay below OP, we don't do anything. But once it go above OP, right, CCRY is a buy already. All right, based on that, if you want to. The KSI have been all the way green, and the KSI jump already give you the initial advantage of this. But after that, you can see the market basically came off the star on top. So you can draw a line here, and I draw another one here. So you can see that the market actually loses OP, and it came down. But the downside was not very heavy, and then the market tries again to go above OP, all right, for the buy. So once the market crosses the pivot one, we can see down there itself, right? The market instantly jump up. Okay, so this is a classic trade for above OP, above P1, classic trade to buy is somewhere around here. So of course, on the hindsight, let me share this with you. Now, when the star came out, you had to draw two lines, the high and the low, right? Okay, that's the first thing you had to do. Then, of course, you also notice that the market basically went below, it's a sell. Of course, the KSI also turned red at the same time. All right, then after that, it decided not to go down further and did a CCRY. And then after that, you notice that the market basically slowly and tapped the OP and then had to move higher, right? Because the market knows that, right, something big movement is coming in, and truth be told, from the green dots itself, we notice that it's going to have big movement and the market chose upside. So again, all these are information that you gather from the chart itself. Yeah, you all know that. Huh? Okay, so that is the Dow Jones. Let's look at the gold market. Now, gold was a little bit easier. Gold was above MA 200, above MA 30, and above MLP. So very clear, when the market stays above OP, it was a buy from the very beginning. All right, KSI was green, but it's down tick. So it means that there'll be some buying, but not very much. Okay, a bit of like, call it irresponsible buying. Okay, so what happened is that because of that, three lines was all supporting gold. So what happened? Take a look. Initially, the market had no idea where to go, and after that, the market came down. All right, came down already. It's basically stopped exactly at the KDR -1. We know that something is wrong. And then after the market goes up again, ding dong. But this time around, okay, there's no mat at the bottom. So what happened is you can see the KSI jump right here. The KSI jump right here. So immediately it's a zebra. And of course, when the market breaks above OP, it was a buy at first sight. Yep. So can you see that, guys? This is a very important thing about the chart, KSI, the colors and stuff. As much as we want to, buy, sell at a good price, but sometimes we just may not be able to get it. Yeah, we need to expect to have some losses in between here and there. Okay. All right. Okay, so as I told you, it's all right. The China holiday box office plunged by 23% because theaters pushed price to a record high level, and people are not very happy with that. And that's again inflation coming into the picture. Yeah. Now, Facebook, or why we do not want to buy you Facebook, because the market cap now has dropped below to $600 billion. Actually, 600 billion is still a lot of money. It's probably the value almost like a Temasek, if not wrong. Okay, so what is happening right now for Facebook in terms of share prices? Let me bring the share prices in, and you basically look for yourself. Yeah. Now, this is Facebook share. You can see that, okay? Not only that it lost my 200 moving average, it actually went down further. It has now break below my 61.8 level. Now, the lowest point to the highest point, I did some mistake too, but you can see now the market is now trading below 61.8. So, which means that there is a small chance, but a possible chance that the market can really, really, really go down all the way, okay, from here itself, all the way down, 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 and hit this point, and that will be $19, okay, 19. Now, 190, sorry, 90, okay. So it'll be 190 for Facebook now. Hey, wait a minute, yeah. Okay, now Facebook is now trading at 220, as you can see on the closing price, 220. So for it to hit 190 is another $30. It's another 10% drop, 10 to 15% drop. So is it possible? Well, it is likely possible. You can see something over here. Hold on a minute. Okay, the volume there. Now you can see on the Facebook side that the volume has been still pretty heavy. All right, it's not as heavy on the day that it dropped, but the thing is that it's still pretty heavy. So of course, the market yesterday created a doji. So today, likely the market may rebound because it's a doji, and the market been down quite a fair bit. If the market rebound, we will only see here, and this particular price is, how much is that? 232. Okay, so what we are seeing now is that if the market is to recover, 232 will be the resistance. But if the market is to fall, then the market may continue to fall all the way down to 190. Now, if you hit 190, it's all right. To me, maybe for speculative bet to just buy for the fun of it, you can try. Yeah, at 190, if it goes down, you can try for speculative reason. But if you ask me, then of course just don't buy. Just don't catch a falling knife. It's the best deal, right? But if people want to buy, then I already tell you this will be my view, yeah? Okay, so you can see that there are reasons for that, and so it's pretty lengthy. I will not go through that. But primary idea is that it's because of their involvement as a media company, and also it's like a mouthpiece to a lot of this so-called politicians. So it could actually make it quite dangerous for them as such a company. All right, so that will be all for the global news. Let's look at the important market information. Now, because I told you guys my CNBC Pro subscription got to be a problem, so I couldn't get you the content. I can only share with you the headlines, yeah? So apologize on that. Okay, so you have Cathie Wood selling for $142 million worth of Twitter shares ahead of its earnings today. So not too sure why I couldn't get the data, because I told you I cannot see it, but why will Cathie Wood sell unless she knows that the Twitter shares will be very bad? Now, Facebook shares are already considered very bad, so Twitter is all right. I kind of suspect that it will be. And that's the reason why Cathy was trying to sell ahead of it, just the one to be caught. So the traders, be very careful, especially later when Twitter come out its earnings, yeah? So that may pressurize the NASDAQ a little bit. Now, Fund Strat Tom Lee actually says that, right, there are gems in it. So because I cannot see the article content, so I'll leave it there. But if you know what are the gems, you can key it right now. And I think maybe he's on Facebook, maybe? I don't know. Okay, all right. And the last one is that the stock market may have priced in the Federal Reserve rate hikes because now the market is still not going down much and the dollar is actually coming off a little bit to prepare for it. So all these tells you that, right, the market is slightly already priced in, or they know that the interest rate factor is coming in. So every time that the interest rate hike itself, likely the market will shake a bit more than usual. All right, so now we come to the important alternate market news. I want to share this with you today. A few things to go through. Now, this is the global equity valuation, the PE10. Now, you notice that, right, this is price versus 10-year average earning, and USA is now way higher than usual. And it, of course, is actually higher than the time when you have your this 1999 NASDAQ drop, and then after that will be the what do you call overinflation. So you compare to emerging market and developed market, right? They are still so far away. Their PE ratio is up between 15 to 18, so it's a very good number. But for US itself, right, look at it, the PE ratio may be already 45 already. So again, this is a scary part that you're buying things at a very expensive level. So you have to make your own decision call, because you can see right now, right, last year alone, there's more than 300 companies that did the IPO setup at more than $1 billion. Okay, that's a very good money for the exchange as well. But of course, to the people who actually buy here, buy there, then they'll be stuck, because now the share price is no longer near the high itself of some of them. And of course, with so many startups now, when things go into a problem, you have a repercussion effect, yeah, domino effect. So you can see that, right, at the moment now, we're spending a lot of money on derivatives and interest rate derivatives. It means that we're talking about, if let's say there is some, money given to someone else, there could be an interest bearing involved there. And of course, if the person is a little bit much more pleasant looking, maybe sometimes they can move with it. But regardless itself, right, the GDP numbers are very low considered to the interest rate derivatives and all derivatives. So if let's say if any time itself, right, you are thinking whether it's the market worth to buy, right? Look at this chart right now. You can see that it's a little bit too high. You can try to, fight it, but I tell you that you may have to expect to lose some money. Yeah. Now, of course, there's a report from Bloomberg saying that it's never been the worst time to buy a home. Okay, it's never the worst time to buy a home. And of course, what's the reason? The reason is that the 30 years fixed rate refinance is 3.99. So maybe if let's say they're going to increase again, it may go even higher, right? Yeah, if you increase interest rate, it may go higher. Okay, so that's the reason why all these things are showing that inflation is a big issue. And of course, from Bloomberg Market, it says that this current crisis for China is a molecule crisis. They ran out of everything. If oil, gas, coal supply, cotton, everything is no longer there. So apparently it's all right. This is a Bloomberg Spot Index. I can tell you this, also known as the CRB Index previously, if I'm not wrong. Now, this is where the 23 commodity prices all combine to create index. And back then in 2020, when everybody was dumping their shoes and stuff like that, yes, we have a swing sell-off. But if you don't get it out itself, right, look at it. Okay, this will happen back then in 2001, 2006. And then all the way up V-shape. So for me, I also suspect it will be a V-shape while movement downwards, but again, I cannot be sure of that. Yeah, if it goes down all the way and then go right, then that will be fun. Yeah, but the thing is that with the commodity prices now still surging, is that right? Obviously, there's only one thing will likely happen. If commodity prices keep on surging, then the Federal Reserve have to do something to it. The central banks around the world have to do something to it. So let's take a look right now. You can see that. Oops, sorry. Once again. We can see that the diesel futures now is much higher now compared to the previous prompt spread. It's much higher than normal average. And then of course, this is all the metals that's not gold. You can see that all of them are moving up very strongly compared to their team members. You can see that, sorry, the graphic is not clear, But in short itself, the user are trying to explain to us that the market doesn't want, the market doesn't want to be stopped. They want to go higher. So now let's take a look. This is a very, very, very important chart. Let's take a look. Okay. Now this is from 1970s to today. I want you to take a look itself before I explain it. Okay, how many of you understand this chart here? Do you understand this chart? Now this is the equity versus commodity chart. Let me take equity versus commodity, and then you come out with this chart. Okay. Now, how many of you understand this chart itself? Tell me. If you think you understand this, key the word yes. All right. Do you understand what is this chart here itself? Just realized that my Facebook is not working anymore again. Okay. Okay, I just see Sue and Liu this reply. How about the rest of you guys? What are your replies? Okay, I can see that, okay, still only a 2% reply. The rest of you guys, can you understand this chart here as well? Oh, okay. Wow. So, okay, so many of you all don't get it. Okay, never mind. Sorry, because I was trying to wait for your answers, but I don't see anyone coming. Okay, now the answers are coming out already. Okay, sorry for that. Okay, so if you don't understand this, fine. Of course, at the start itself, may not be that easy to understand. Let me explain this to you slowly. Yeah. Okay, this is the equity versus commodity chart. So equity versus commodity. Okay. So you take the two indexes, they divide and they get this particular index. Okay. So if you notice this, let's just make it even simpler. Remember back in the GFC time, the global financial crisis back in 2008. Okay, let me just draw this slowly with you. Okay, if you notice this, okay, we know that the crisis actually exploded back in 2008 and 9, right? So what happened, if you notice that, is that when in 2006, over 06 time, the commodity prices and the equity prices were still okay, all right, in the medium of 4.1. Then after that, the market, the commodity prices shoot up. Okay, commodity prices shoot up to from 2006 to 2008. Okay, commodity prices shoot up. Then what happened is that you have your GFC, which is your global financial crisis, whereby Lehman crisis happened. And when it happened itself, right, it actually repressured down the commodity prices, and then the thing came down all the way. Okay, all right, this is what happened. Okay, then after that, you notice that, right, the commodity prices in the world actually what they call get cheaper, and of course the equity market started to strengthen. Okay, after that, and that is where things happen. Okay, that's where the chart goes down. Okay, so with that understanding now, I want to show you here itself. Okay, you notice that, right, around this area, okay, this area where they bottom out, right, around here, because the last time you did something was something here, okay, and then you look back to this point here. Okay, now, do you remember back in 1999, we have the .com thingy, whereby everybody was so crazy on .com, all the internet stocks itself, remember, back in 1999? So at that time itself, right, apparently that was also a problem. And when that problem actually was there, the commodity prices was actually at the very, very low end. Okay, so what I'm trying to explain to you is this. It seems that, right, whenever there is a mania, a craziness in the market, you actually have the this index at the lower rank of the lower side of the market. Can you see that? And then after that, as it climbs, climb, at a certain average out level, it will basically have a crisis that will happen. So that means that there must be a mania at the bottom, a mania or something that is crazy that everybody's into it. And then at the top itself is a crisis. Okay? All right, and it actually have to do a lot with the commodity prices. So you got an idea now. Okay? So by seeing that itself, okay, we are what heavy crisis now. We have a big bubble. We have the crypto moving up crazy. We have the so-called inflation at a very high price. We have stock market at a very high price. We have housing at a very high price. We have materials at a high price. So basically, it's all right. All the bubbles are actually there. Okay. So what does it mean? That means that now we have a mania. Yes, the mania is going on. So it's exactly what happened back in 1999. So that means that, right, if let's say this thing is turned upwards, okay, if it turns upward itself, right, that means that, right, it will move towards a crisis, okay? It will move towards a crisis. Got it? Yeah. So that is how this chart is being utilized, okay? All right. So the second thing itself, this is the ICE Bank of America US High Yield Index Option Adjusted Spread. So again, in simply put, now the market is at a very low level because of the easy monetary policy. So that means that right now the yields are these are all the junk bond yields. There are no people buying the junk bond yield right now because everybody is happy whatever is going on. So when people start to buy junk bond yield, it's only when, let's say, when the market really run out of idea what to invest, then they realize that, hey, maybe we can just do some junk bonds. Then they will start to go into that itself. So that is what is showing over here. So that means that at the moment now we are at the very easy monetary policy. So if any time the interest rate values have to go up in the market, right? This particular adjusted yield and spread will go higher also. So when that all happens itself, right? This is going to create the worry that we tell you before, the market may enter into a recession. Not now, maybe about 6 months or 9 months to come, but it is very possible. All right, let's show it to you is the spread between the junk bond and 10-year Treasury. This shows the historic spread between the junk bonds and the 10-year bonds, okay? So at the moment now, we are at 2.7%, which we are here right now, okay? So this is the lowest level. And of course, the only way to get out of this is really not possible, yeah? All right, now this is the government bond 2-year yield, okay? You can see that, right? Every time when the market comes down, and then when the market starts to phase out, right, because of the US Federal Reserve trying to tell you that, okay, we're going to increase interest rates soon. You can see that, right, from 2012 to 2014, more and more people are getting involved in the market. All right, back in 2002 and 2003, it happened the same thing again. So at the moment now, this tells you that, right, the tightening monetary policy, right? So as and when you can see the curve is moving upwards, is because of tightening monetary policy. And when market do a tightening policy, 100% the stock market most likely will fall a bit, yeah? So based on chart view right now, it is possible that the market may be able to hit my point and we may have this problem here. And of course, when that happens, you notice this is always the start of the stock market sell-off. Okay, you can look. The stock market sell-off back here is in 1999, remember? Then this one was 1990. This one is the date itself, that was somewhere nearby. So the other thing is this now, if the market is to move up right now, as you can see, because of the interest rate factor, then very soon, for 2 to 3 months' time, we may see the peak again. So that's the same thing again, as just why I told you just now, right? I suspected that the market may actually bottom out have bottomed out in about probably this April period of time. So prior to that, there could be some selling. So my view is there could be more selling coming in the coming 2 weeks than buying. Of course, now the market is going up. People asking me, can buy. But if you look at the fundamental and what I just shared with you, right, it doesn't show that it's a time to buy. In fact, it's a time to prepare for further selling in the market, yeah? And of course, the big thing is if you put them together, the government 2-year yields versus the S&P 500, you will notice a very interesting phenomenon. Is that, right, the blue one is the the 2-year yield. Now you notice that when the 2-year yield is actually moving upwards, okay, the stock market also go up, yeah, okay. But once it hit a peak, all right, once the market hit a peak, right, the market couldn't take it anymore, and of course the selling comes down all the way. And usually this movement itself is about minus 0.24% of the actual value, all right. So you can see that it happened again when the market was moving upwards. The S&P is going up, the stock market rises, but towards the end itself, right, you can see that it became taken for right here itself, because that's the market really crashed down. Yeah. So what I'm trying to say is this: now we are seeing a tightening process coming in. You can see that the yields are moving up already, even though there's no interest rate hike. But the stock market is still kind of like moving higher a little bit. A lot of still is within what I said, that there's no much panic at the moment. So if the yield continue to go higher, then obviously it's all right that we've more work to do, and of course the market may actually fall because of that. Got it? So that's why I say that, right, if you put it holistically, it's all right. You put everything all together, it seems to be telling us that, right, if the interest rate environment is going up, in order to curb inflation, to basically give more the people to buy food, which is very important. If not itself, right, the market will go into a panic mode. Yeah. So that's the reason why I'm sharing this all with you right now, something very different. So the potential risk-off move coming in means risk-off means coming on risk. Yeah? All right, and the last one, this is a very powerful chart. This is where what we have this, we call it as the 10-year versus 2-year, and of course this is for you to take note of the short term. So what you can see right here is that, right, whenever the index is moving downwards and touch the black line, which I personally know I know people who does that. Okay, you notice that once you hit there itself, the thing is that you're going to do inversion, and after inversion itself, right, when this happens, that is the start of the recession already. Can you see it? Okay, so it happens before, and I believe it will happen again. So this time around, we have a new friend, and we can see that now the numbers are definitely coming down. Okay, if the number continue to fall and it touches the level here, okay, then if the market wants to do a U-turn, means there's going to be a U-turn in terms of the interception, like this. Then of course straight away, without a doubt itself, that means that the stock market is going to go into a very heavy selling. But until that happens, it's all right. I just think we just basically follow the normal charts to be easier for you. Okay, all right, so that is my point for this. That means in short itself, inflation will definitely spook the interest rate environment, and interest rate environment has proven that whenever interest rates coming in, the whole duration of activity will be about 2 months to the maximum 3 months period. Yeah. So this again is a very important tool to remember, because now the data are all showing that it's coming down. Yeah. Okay, all right, and of course this is the yield spread between the long-term Treasury bonds. You can see that versus the 3 months bond. We are now at the lower level, and this lower level was last time when we had this itself was back in the 09 crisis and 01 crisis, and of course further back. So every time when this thing happened, the 10-year spread to versus long-term bond, 10 years versus 5 years, 5 months or 3 months, you really need to watch out for this. That means that there should be something big that is what happened. Okay, something big. I really don't know what's going to be something big, but definitely the chart is telling us right now. Okay, all right. So all clear on this. If everybody is clear, can you put the word clear? If you are lost, key the word lost. Let me see how is it. All right. Sorry for that. It will make you blur on that itself. All right. So this is something very heavy. I know that, but I'm just trying to tell you this itself that remember at the start of the year, I already tell you guys to be very careful of the market. And of course, after that, the market really break down more than 10% for the NASDAQ and 10% also for S&P. But the NASDAQ itself dropped the most, drop of 15%. But of course, most important is that we all benefit after all the sharing, right? That is more important. Yeah. Okay. All right. Thank you very much. Hopefully, you guys are clear what I just said. Anthony, clear. Lou is clear. Susan is clear. Danny is also clear. Wow, you guys are good. Okay, all right. So this is the final one. Take a look before we go for our charting. Take a look. Now this is the gold chart versus the S&P chart. You notice that at the start, right, when the S&P is moving up, gold also move up at the same time. When the S&P go down, gold also follow. So you can see that majority of the time it's like that, okay? Or else there's sometimes itself, right, you can see the gold and S&P is falling off, but gold couldn't go any higher. All right, so that one is where it missed out. But after that, right, in 207, when we try again, this time around, everything looks good. The only thing is this, the challenge will be, you know, for traders. This is the thing. Okay, sorry. Okay, done. All right, so that will be all for the fundamental news over here. Stop over there. So gold to me is all right. I believe gold will later on pull back first because I believe the index will pull. But after a while later, it will shoot up already. Gold will shoot up after that. So watch out for gold in the next few months' time. I strongly believe that gold will still be able to go up to my target of 2218. This level, when calling for a long wall itself, there's like a lot of knee-jerk effect. But still, I'm still a big believer that 2218 will be triggered within the next 6 months to 9 months' time. Yeah, okay, because I believe in the Federal Reserve. Okay, let's look at the chart right now before we go for our lunch break itself. Okay, first of all, we have a very, very strong recovery on China market yesterday. Now, China market was down more than 3% at one stage. All right, and then after that, it bottomed out very nicely. That is for those who are PDP trade, is actually a KSL recovery. So what happened is that the market recovered strongly all the way. Now, that means that the market actually reversed almost 400 points from the bottom. At the moment now, it's trading a bit higher and it may be testing this particular point. All right. So traders, if the China 850 continue to go higher, we may see touching this point here itself. And this point is how much is this? $15026. Yeah. Okay, all right. So sorry, I can get the data in here about around here, 15105 level here. Okay, all right. Okay, the technical point. Okay, so that is China 850. Sorry for the reading. Okay, so let's look at the Dow. Now the Dow today basically is a very bullish call because why? The Dow basically for today is above MA30, above MA200, above MLP. So today everything is bullish and the KSI is also green and it's an uptick green. So everything is pointing at a higher level for the Dow Jones today. So the Dow Jones has a potential to go higher and that is towards the 35,639 level. That means that the Dow has about 80 more points upside if you're going to continue to go up further to pivot 1. Okay, at the same time, what I did was I take the highest point here and the lowest point here and I did a Fibonacci. I noticed that there is a 61.8 here. The 61.8 level is 35,495. Okay, so which means that right, this 61 point right, it basically is a usual technical point. But if the market breaks above 35,495, it should be able to go to this point. This is what it means. But if the market do pull back, watch out for 35,495 because that is an absolute technical point. And if the market loses that itself, right, the market can come down all the way to the next level, next Fibonacci number at 35,044 or 400 points away. Yeah, so it's actually possible. Now, for the time being now, because of what I'm showing now in terms of the news, it doesn't show that the market has any chance of going down. But in the technical itself also looks pretty good. So overall, it's out at the moment, the optimism is still there. I cannot see why the market cannot go higher. But of course, if you want to be a seller, you must be very careful and be smart, do your hedging accordingly, or take your risk management to the next level by cutting first, maybe come back in later. Yeah. Now this is the NASDAQ. Now NASDAQ today is very nice. Also the CCRY, but because the CCRY the profit not been given, so we will not aim the 15,062. But the CCRY by right today is a buy, and it's above MLP is a buy. So it's only below MA itself that is actually against it, but should be able to overcome it. Yeah. KSI is red in color, so that means that there will be some profit taking along the way. Now S&P 500 continue its upside. S&P 500 now is going to go very near to the MA 200, and that's 45.42 level. All right, MLP MA 30 is at 45.19, and that basically lands support. Was today low is 45.20. MLP is 45.08. That means that the both MA 30 and the MLP is supporting it. That's why the market is going up. KSI is also green, so everything looks good. S&P has the potential to go all the way back to 35,098. Okay, it can go all the way there itself. All right, but then again, if the market breaks down, you must have to break two levels first: the MA 30 and the MA 200. Then come to the MLP. Then we decide. Okay, at the moment now, okay, S&P has the potential to go out to 45.88, so or even higher, 45.98 based on the BMB 1x1. Yeah. Okay. Now Hang Seng today is going to be was tough to trade today, very flamboyant. Now the Hang Seng today, the opening price is between the MA 30 and MA 30 and MA 200. So that means that right, momentum wise itself, the market, the short term momentum is supported, the longer term is rejecting it. So that's why this morning when the Hang Seng opened, it basically tend to trade higher because the MLP is also supporting it. Above MLP, above MA 30, so 2 versus 1, the market push up higher. So of course it can go higher now. It can go all the way to the 24,934 because that happened to be very nearby to the MA 200 also. That means that if the Hang Seng rally further, it can go all the way to 900 series. Yeah. Okay. The KSI is interesting though. The KSI for the last few days has been red. All right. So that tells you that means that the market goes up, but the KSI turn red. So you can see that there's a strong divergence here. And again, like traditional indicator cannot be because most indicator is price action based. If the market goes up, it's not right. The indicator will actually follow up. But for us, it's not right. It tells us that something is wrong. So I cannot say what is wrong, but I just know that right, based on what we're seeing right now, the market may actually be more volatile later on itself because from what I'm seeing that there are two sides of the camp involved in this chart here. Okay, Nikkei has pushed up higher. Yesterday it went down. Today is higher. It's above MLP, above MA 30 now, very strong. Although the market is still below the MA 200, but the two of them, MA 30 and the MLP, already motivated it strong enough. And of course, the KSI green also given up the upside movement. So to me, it's all right. The first target you should be going for is 27,660 because that is the nearest fresh upper bow, the nearest fresh KCB. Yeah. Okay. Next target is out to be as high as 28,009. Okay. So traders, please take note of these two numbers for the upside for the decay. Okay, now I suspected that DAX will recover a bit. It really did. Now the market really hit the MLP at 15185. It hit, and then after it reversed to go up itself. Let's take a look. Okay, something strong. MLP. Okay, you can see on the chart here itself. You can see yesterday the market went up first, then we came back down. It hit the MLP, right? Can you see that? After hit MLP, ding dong, ding dong, ding dong, ding dong, ding dong, and then it rallies. Yeah. So the MLP plays a very, very big part to inform traders that this is not the time to buy or sell. You just to be watching it and then take one side later on. Okay, last few, crude oil. Now, crude oil has came off a little bit because I told you that the dollar is increasing in bit of value. And of course, the crude oil, everybody's calling for $100. Usually when everybody calls, things will likely be going opposite direction. So the thing is that today, the crude oil is now back to $88. It was at a high of 91 plus dollars. Now, based on what I'm seeing right now, right, there is still a chance for this crude oil to go higher. Because first of all, I still believe that my target will be met. Second of all, itself, right, the market's above MA 200 and MA 30. So now the long term is for you, the medium term for you, the short term itself, right, can't give much really. All right, but then again, if the market stays above MLP 89.55, then of course we will have a new upside. Okay, over here. Okay, and the level is still 92.80 cents. Yeah. Okay. All right, last few. Now, gold has started to trade upwards, as I said. Okay, our target was 1827.1. The market has already given us the profit. So what I did is I take partial profit, and then my entry was here, right? For my stop loss was here. I shift it all the way here now, slightly higher, and that's it. I don't care really. So either I win half of the money that we already have, or win full of the money that we took from the market, or we basically sell right, go for the broke. If I go for the broke, if the market goes down against us, then we lose. Then whatever effort put in yesterday is wasted. Yeah, so that's why we don't go for the broke. All right. So with that here, that is the gold price right now. The next target could be as high as 1835. All right. If 1835 doesn't interest you much, then 1847. That means that, right, if the gold price can cross higher, it will go to 1835 today. And of course, if 1835 breaks, there's a chance of it going to all the way to 1847. Okay, all right. So that is the view right now for the market here for gold. Now for silver initially jumped downwards, and then after it rebounded strongly at the cage level, and now it's above MALP and above MA 30. So for the momentum wise, it's strong. All right, and it's going towards the pivot one, and that's $23.45. Do note MA 200 is for $35.57. It's very nearby. Now the KSI remain red, the blue bars remain there, but the bars shows that, right, the decreasing of sellers, and also the sellers volume now, sellers activity is also reduced a little bit. So there is a chance for silver to hit $23.57. Yeah. So for those who are still holding silver, that will be okay. Okay. All right. Let's look at the Bitcoin and Ethereum. Now, for Bitcoin, there is some profit taking today because it's a doji, and of course, if we're a directional day, it could be going down because now it loses MLP. Can you see that it loses MLP exactly? So now, if it loses MLP, the next level you have to go down will be here, and that's 39,752. Okay, so if the market, if the break continue to go down below MLP, the market should be around 39,752 in the coming days or weeks. All right. Upside itself, right? Very simple. Upside itself, we can look at 45, 113, or you go to the midpoint at 47. Sorry. The midpoint is about 46,225. Yeah. Okay, so downside is here, upside is here, given to you already. Now, Ethereum also looks exactly like the Bitcoin chart. We have a doji directional day potential, and also the market rejected MLP. So, which means that now if the market goes below the 31st low, go below the opening price, which is 3112, which has already happened already, right? If it continue to go down, be careful. The market may actually be quite a downside to all the way to 2813 level, 2813 level for Ethereum. Upside level, well, today is below P2, a bit tough, but let's say if it goes up, right, then of course 33.28 will be the upside level. Okay, so 28.13 downside level, 33.28 is the upside level. So let's say if you are going to be, looking at this two crypto, then let's take a look at numbers, yeah. Okay, so to summarize up itself before we go for today, I believe that the market is due for some profit taking soon. The recent upside itself is definitely a more controlled upside with no news. So next week we have a very important part is tomorrow with CPI data. So of course, if the data are very high, and that will likely going to spook the market a little bit. Yeah. Okay. All right. So that will be all for today. Thank you for watching again. I appreciate your time and waiting for me. Just remember, this is how the market is definitely having a bit of problem, but of course the market can push higher before you can actually say, I understand. Yeah. So with that is all, thank you very much. Do remember to bring your friends in for this coming Saturday preview. I will do a great job by this time around, less market watch, but a lot more on the system usage and then after the before and after. And of course, I'll show you your friends more stuff and why you should join the TWB community. Okay, thank you very much, guys. Have a great time for lunch. See you later. Bye-bye. See you tomorrow, I mean. Bye-bye.